All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Friday, June 21st, 3:45 p.m. Apparently today is, what was it called again? Chad witching or something? Quad witching day. We found that out this morning, what quad witching is. A lot of stuff has happened in the past 8 hours in regards to the broader market. Quad witching is a day we found out this morning, which relates to rebalancing within the indices in the stock market. And as a result of that, and along with option expiration. So the actual terminology for what it means, and this is going to matter in terms of everything we're going to talk about in a little bit, is simultaneous expiration of 4 times a year of stock options, index futures, and index futures options derivatives. This happens 4 times a year: March, June, September, and December. On the third Friday, June 21st is the third Friday of June, which is why this is happening today. So definitely a lot of instability and kind of uncertainty and volatility that happened in the broader markets. And that's what we saw today. Obviously with Palantir, we'll discuss that. Palantir, nasty day, down. How much is Palantir? Down 7.35%. So that took a little bit of hit. NVIDIA down 3.54%. Here's a fun stat for you. Every 1% NVIDIA moves up or down is the market cap of Snapchat. So NVIDIA falling 3%, yeah, that's like $45 billion or something coming down. So obviously a hard move on NVIDIA. Fell from 140 a couple days ago down to 126. I think that is kind of the main reason why Palantir is down, and we'll talk more about that. And then S&P is still doing well, 544. I mean, it's down on the day. It hit 550 yesterday in the pre-markets, but at 544, I don't think one can necessarily argue that it's, in a horrible situation given how much it has run. Now, what has surprised me today, guys, is this stock right here. The stock that we have talked about for a pretty long time on this channel, Robinhood at 22.20. I mean, I don't fully have the best explanation in the world for why Robinhood is doing well on a day where the S&P is down. Again, Robinhood is a bull proxy on the market. And on a day when Bitcoin is down, and Bitcoin at one point was 63,354. This green Robinhood, this has been green for the past 3 hours. Robinhood struggled a little bit in the morning, went down to 2170 or something like that. And then since then just rebounded really easily. It hit 2118 actually. Wow, 21.8. Oh no, that was yesterday. Today it hit 2130, 2128, and rebounded all the way to 2233 and now 2220. I have a couple reasons for why I think this is happening. Some stuff I tweeted about. We'll go through that a little bit later after the bell. But really nice to see Robinhood green on a day when the market's down and Bitcoin's down, Coinbase is down, CleanSpark is down, all the crypto companies are down. Robinhood not down at the same time. So nice to see that divergence and the market basically saying, hey, we don't care if Bitcoin's down. We think Robinhood has different benefits towards it besides just Bitcoin. So really good day for Robinhood there. All right, so let's talk a little bit about Palantir and discuss why Palantir is down and what's happening in the world of Palantir. So, I mean, I think we kind of all knew this was going to happen. I don't think it's that big of a surprise, quite frankly. I mean, we talked about this yesterday on the market open. You know what was so funny, guys? So my dad, right? My dad, I sold him a $40 covered call on Palantir for December. So that means, for those that are not familiar with it, my dad has 200 shares of Palantir. I took 100 of those shares and I covered a call and I sold it to someone else who bought the call, saying that Robinhood will get to, or not Robinhood, Palantir will get to $40 by December of 2024. And they paid us $1.06 a share, which means we got $106 for that contract. And my dad saw that today on his account, and he called me after the market open. He's like, "Why did you buy a call for Palantir to $40? I don't think it's getting to $40 by December." I was like, "No, Dad. Someone fucking paid us for Palantir to get to $40 by December." And he started laughing. He's like, "Who the fuck paid us $100 for Palantir getting to $40 by December?" I was like, "Dad, the crackheads came out yesterday and they wanted crack. And your boy dealt them some crack." Palantir's run to 26, we all saw, was a bit aggressive. I mean, from all metrics, technical metrics, fundamental metrics, there was really no big news that, yeah, they had 2 partnerships, but those partnerships were relatively inconsequential in regards to revenue recognition, right? $20 million. The other deal, we didn't even know how much money they made off that. So it was a trend based on NVIDIA. And yesterday on the show, we said, well, if NVIDIA has some weakness, Palantir will have some weakness. And in general, people might just take some profits. And as a result, yesterday was a great day to sell covered calls. It was a phenomenal day to sell covered calls on Palantir. And again, it's not just Palantir, it's any stock that runs that is, I mean, if you sold covered calls on NVIDIA yesterday when it was 133 and you sold a covered call for 140 for 2 weeks out that someone is willing to buy, they paid a hefty premium to assume NVIDIA will go to 140 in 2 weeks. Now, maybe it does, right? But in general, when something's up 68% in the past like couple months, it's gonna take a little bit of a breather. Palantir is still up 40% year to date, even with the 7% decline. It's had a phenomenal year. So yeah, it was going to take a little bit of a breather when it starts trading at 25 times price to sales. That's just like not sustainable without some of the growth or without some of the revenue guidance increase on the growth. Now, someone says Palantir was downgraded. That's why it's down as well. Yeah, they did get a downgrade today to $20. I thought the downgrade was, I have two perspectives on the downgrade. The point of the downgrade, I posted about this on Twitter. The guy, his name is Brian White. By the way, let me show you guys this one picture I took of Iliano yesterday because this was hilarious. When we went to get the steak dinner, I was like, all right, how do I use this picture? And this is what the meme became. So Brian White downgrades us to $20. And so here's the meme. Me looking at my portfolio this morning after some dude named Brian White downgrades my largest holding. I love this because, like, if you can see his face, you just see how it's like his lips are curved. He's like, it looks like you're looking at your portfolio and you're like, who the hell is Brian White downgrading my fucking largest holding and dropping me 7%? So I told you guys, Iliano's a French model, dude. Literally, he got the chest hair out. He's got the sleek physique with his chain and his watch and his shirt. I need to like embody this style one day. I don't know if that style would fit me, but the point is, yeah, the downgrade happened. My two perspectives on this is, one, he was saying that there's like a nuclear winter coming for SaaS. I don't know if that's necessarily correct. Maybe it is, maybe it's not. I don't know if that's a reason to necessarily hurt Palantir. The counter argument to that, if there's a nuclear winter coming for SaaS, Snowflake, CRM, all those companies, Palantir, if they can show that they have real AI growth, not just like software growth like some of these other companies, they can benefit from the sector rotation of the money leaving Snowflake and Salesforce, et cetera, and going into Palantir. Will that happen? We have no idea. We'll have to see in Q2. But could that happen? Yes. The other part of their downgrade was like, oh, it's egregiously expensive and egregiously overvalued. And from that perspective, I'm just like, look, you can keep saying it's overvalued aggressively, egregiously, whatever adjective you want to use. And at some point at 2650, was the run a bit like getting up there? Yeah. Could you make an argument that it's getting a bit overvalued? Of course. But I don't think that's necessarily the reason to say, hey, this stock deserves to fall another 35%. Like at some point we got to get past these downgrades of, oh, the company will always be, or the stock is overvalued. It's like, unless Palantir is $45, $50 in 2021 type of overvalued, if it goes to 26, is it overvalued in the short term? Sure. Does that mean like it's oh my God, sell this thing below $20? No, I don't think so. Right. So I think, look, there is some merit to the argument about, hey, it's getting ahead of itself. But this downgrade was like, this stock is so overvalued. It does not deserve to be trading at these levels. This is a horrible valuation. And from that perspective, I'm like, okay, Mr. Brian White, who are you? Because there's a lot of other analysts that I respect, aka Dan Ives, aka Mariana from Bank of America, even Brent Thill, the guy who has not liked us for 2 years from what's his name? From Jefferies, who says, yeah, Palantir $24. So when you're Brian White, and I don't necessarily know who that guy is, I think he's always been bearish on Palantir, but when you say $20, and there's a lot of other analysts that, have been bearish on Palantir historically that are saying, no, we think it's at least 23, 24. It's just like, I don't know, what's the logic for what you're coming up with there, right? And so it doesn't make a lot of sense. So TG says, I was so happy I got an additional 75 shares today. Yeah, let me know if you bought the dip. I know there was a bunch of people today that were indeed buying the dip. Again, my reasoning for why Palantir came down outside of the downgrade, like forget the downgrade that happened today, probably that, played a role in us falling 6%. I really think it was NVIDIA falling. I mean, like NVIDIA ran to 140, which was, if you just even look at the technicals, NVIDIA was above its 50-day moving average. Like all the basic technicals showed you, yeah, this thing was going to have a little bit of a pullback, right? People were going to take some profits. If that's the case, Palantir getting to 26.5, almost 27. If NVIDIA cannot sustain those multiples, there's no way the market would let Palantir sustain those multiples unless there was some fundamental piece of news on Palantir. And there just wasn't, right? There was no huge contract, no huge partnership, anything like that. So yeah, I think Palantir fell because NVIDIA fell, and it's really not that serious. I like more buying it at 21 and 22. That's when I bought a lot. Again, I shared this post on Twitter. Me, my dad, and my sister bought about 1,500 shares when it was at 21. And so that's what I really like. I mean, like we bought a decent amount, dude. Like we bought a decent amount across all of our accounts. And so from that perspective, not really that tempted to buy the dip because we did buy the dip. Just dealing with the price action right now. So this right here, May 20th, I tweeted, market's going up, Palantir staying flat until Q2 might be the best accumulation time, provided growth continues to improve. By Q2, we also may get a rate cut. That still might happen. NVIDIA earnings this week could be a short-term catalyst as well. And so, yeah, we bought a decent amount at 21. We'll see if it gets back to those levels. Not sure if that could happen, especially if Q2 growth is good, but we'll see how that plays out. We had Tom Lee on CNBC. Let me pull him up. he had some interesting thoughts about where the market is going. Obviously, he's still a bit bullish. He did get that $5,500 price target correct, even if it wasn't the pre-markets. Was that yesterday? I think that was yesterday. Yeah, it was yesterday. And so he has some more thoughts on what's going on in the market, on the cycle, and why it might make sense to still be buying at this point in the cycle. There we go.
With the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal because Doug just made a really interesting point about millennials and how they're so conservative in their positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like NVIDIA, like we've rarely before seen? I mean, is the water still safe?
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is NVIDIA the thing that you look?
By the way, that's what Evercore is. Julian Emmanuel said the other day. He says the fact that there's so much talk of is there a bubble makes us feel comfortable that there's not a bubble. Kind of the same argument Tom Lee's making there.
Look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick NVIDIA, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if if we were discounting NVIDIA being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell NVIDIA and try to call a top, I actually think there's still a lot of upside.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA, what should I think when I hear that kind of information?
Well, it makes sense. I mean, NVIDIA is the largest stock, so I mean, everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. I mean, everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I mean, that's a hell of a point, right? It's really bearish when everyone says the S&P won't go down. And everyone, I mean, just you can feel the kind of jitters everywhere is like, well, when's the crash going to happen? When is it going to happen? Like everyone's expecting for it to go down. And maybe that is going against the herd, saying that it's actually not going to go down.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
I mean, to an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rate.
And that's another really good point. We got the market close in about 30 seconds or 10 seconds. The fact that stocks have done so well, Rocket Lab right here up 5% on a day, or at a time where rates have been so high, means that when rates go down, the Fed being dovish seems like it's better for stocks versus hawkish because we've done so well, even though the Fed has been hawkish. 4 p.m. June 21st. Thank you everybody for being here. The stock market is now closed. Rocket Lab ending the day up 4%. Not bad. You're welcome if you own Rocket Lab. You're welcome. I know my 25 shares was what we needed to get it up 4%, but now we're up 4%. No, in all seriousness, I think the thing they did yesterday, that successful space launch plus the Japan deal, a couple of days ago, I think it was on Monday or last Friday, I think it was announced on Monday. I mean, that seems like it was bullish, right? So it's not crazy to imagine it going up a little bit after that. But again, this one a volatile one. We'll have to see what happens with it, but not bad for Rocket Lab. A nice 4% day and closing above 5. It hasn't been above 5 in a while. Robinhood, just an incredible performance, dude. I mean, just an incredible performance. 22.32 after hours, 22.29 on the day. Again, the reason why this is incredible is because the market was down, Bitcoin was down, all the Bitcoin proxies were down, and it's kind of like there was enough institutional investors that felt that was their best opportunity to get in cheap into Robinhood while it fell to 21.30 because they didn't let it go lower, even though the broader proxies that Robinhood is associated with came lower, which was the market and Bitcoin. I got a couple of things to say about Robinhood. We'll talk about them in a little bit, but nice to see Robinhood having a nice green day on a day when the market is red. Salesforce up 1% on the day. Snowflake up about 0.96%. Apple, wow, Apple fell 1%. I didn't see that. I did not see that today. Apple's down. What? Apple's at 207, dude. Wow, Apple was at 220. And see, at 220, this is the cool thing about covered calls. There were plenty of people that probably were ready to buy the 240. In fact, I think the you were getting $1 a share for the 240 call expiring at the end of August, which means people were willing to bet $100 that it would go to 240 by the end of August. And if you sold them that call, you made $100, and the odds that Apple goes to 240 by the end of August, it's possible. I just think it's a little tough, right? And so, you know, now the stock's falling down. Those covered calls are out of the money, which is profitable. Down 1% of the day at 207. Bitcoin 64,290, up from 63,354. So that's good. Meta down a little bit today, 494. AMD 161. ARM with some interesting news on ARM and Nvidia. We'll talk about that in a second. It has to do with SoftBank. It was really interesting stuff. GameStop down another 6% on the day. Wow. I didn't even see GameStop down on the day. Path was up 5%. Okay, cool. Path at 1196. TJ did buy another 1,000 shares of Path. I don't know what his average is, but I think he's almost break even or a little bit above break even on Path. So we have 2,000 shares of Path now. CleanSpark did take a tumble. See, this is what I'm saying. CleanSpark down 9% today. I didn't even see that, but it's down 10%. It was at like $20 yesterday. Now down 10%, 17.29. And Robinhood survives and maintains its momentum. Like it's really, usually they fall with all the other Bitcoin proxies, but it did okay. MicroStrategy slightly up today, up 1%. IWM still flat. That PMI data was not the best for inflation. PayPal was actually green today, up 1.35% at $60. Again, PayPal, I think broken stock, not broken company. I'm giving it till Q2 and we'll see what happens after Q2. But I do think PayPal is undervalued. Just a question of when the market thinks that they will also feel it's undervalued. DNA down a little bit today, down 0.49%. Now this thing is at 40 cents. Teladoc, Cathie Wood sold 300,000 shares of Teladoc yesterday at 970. She also bought a new company that we'll talk about in a little bit. Nvidia ends the day down 3.22%. Let's go to the Max 7. Microsoft is green for the day, up 1%. Google, wow, 180. Google's 180. Didn't see Google going to 180. There you go. Google breaking through that like 174 to 177 range. Nvidia again down. Amazon. Oh my God. Amazon. Wow. When did Google and Amazon gap up today? Amazon, that's basically at all-time highs. It's like 40 cents away or like $1 away. It's like 190. And then Google, I think Google 183 is all-time highs on Google. Google and Amazon, it looked like money rotated out of Apple, quite frankly, and Nvidia into Google and Amazon. Exciting to see that for Google and Amazon. And then Tesla was green a little bit today as well at 183. Peter Girardi says, bro, Robinhood is going to crush it. I moved over $200,000 brokerage recently. I love the app, low margin rates. They're doing everything right to dominate. Yeah, Peter, and again, this is what I tweeted about this morning, dude. Like the amount of messages I've got saying people moving 6 figures into Robinhood in the past like couple days because that window is about to expire on June 28th for everyone to move over and get the 1% match. It's a lot, dude. I think the June numbers are going to be kind of ridiculous. And I think the street knows that's the case, which is why the street's like, we really can't sell this thing off. Like we just don't deserve, like this thing does not deserve to be sold off given the amount of money they're about to bring in the month of June. And if you expect a bull market towards the end of the year, and we'll talk about some reasons for why that's the case. Yeah, market. I mean, like Robinhood will do well in that scenario. S&P 500, 544. Where are the Qs 480. That makes sense. And then Palantir falling 6.81% on the day. Why Palantir sold off? 2 reasons why Palantir sold off. One, we got a downgrade to $20 from some analyst that apparently the street cares about named Brian White. Not the most interesting analyst in my opinion. There's a lot of other analysts. And this is the other thing about learning about the stock market, dude. Like, someone can have one opinion, another person can have another opinion. And if you just believe the other person's opinion is better than the other person's opinion, you might make a lot of money, or on the contrary, you might lose a lot of money. So I trust Mariana from Bank of America with a $28 price target, not only because I think she's very smart, but because I literally met her in person for an hour and I talked to her and she walked me through why she thinks Palantir is a special company. And so when you talk to someone like that and you listen to their perspective, and then you just see some random person saying everything's overvalued in SaaS, nuclear winter, $20, it's just hard to like make sense of it. And again, I've said the story many times on the show, but the reason Mariana thinks that all the software sell side analysts are like kind of dumb when it comes to Palantir, because I asked her, why does JP Morgan have $12? You have $28. She was like, these guys don't understand defense. Mariana is a defense analyst before she's a software tech analyst. And so her defense background leads her to believe that Palantir has a massive, massive moat in the government space. And that's going to lead a lot of more momentum for the company outside of just traditional software. On a traditional software perspective, you can argue it's overvalued because all the software analysts look at certain metrics that Palantir doesn't catch up to. But from a defense perspective, there's a lot of qualitative aspects to that moat that's hard to deny. Bayray says, I gave a friend a referral for Robinhood Gold and he got the waitlist with the credit card. He is already on his way as a gold member since early 2020. I still don't have it. Again, the reason some people that have been with Robinhood for a while, I've been gold since 2019, right? And I don't have it. I mean, like, I literally interviewed the fucking CEO and I don't have my credit card yet, is because they are doing, I think, extensive cohort analysis on who to give this credit card to. 3% cash back. That you want to do that in a way that doesn't bankrupt the company or create massive losses, doesn't create massive risk. And so I'm actually very happy as a shareholder that they're taking their time to roll this out. Also, if you're a shareholder, it's a catalyst. There's hundreds of thousands of people that have not subscribed to gold, but they want the credit card. They have to upgrade to gold to get the credit card. Imagine Robinhood finds a way to make them have priority going into Q3, and they add like a couple 100,000 people above expectations on gold into the end of the year. Like, to me, that's a good thing. Even if you don't have your 3% cash back right now. Oh, speaking of credit cards, I got to share this real quick. I paid off the $3,800 that I had on my credit card bill today. I didn't have to pay it off for like 7 days, but I decided to pay it off early today. And yeah, that sucked, dude. This was one of the largest credit card bills I ever paid. $4,000 in a month. So everyone who talked about that cup and handle on Palantir, they need to hand me a cup of ramen instead. Because this was painful. So $3,800. Now I know some people watching this are like, Amit, I spend that every week. Like I had a bunch of people in the comments like, what, dude, I spent $15K a month. I get it. But in my situation, $3,800 was a lot. And in June, we spent a lot of money with traveling and food and all that stuff. So yeah, June was a tough month. This $3,800 could have gone into so many stocks. That's how I think about it when I spend money on credit. I'm like, it could have gone in so many different directions. But it went to paying off stuff. Now, granted, it was worth it because we got to go to California, AIPCon. So it's not like I have any regrets about it, but we did pay off the credit card and I didn't get any 3% cash back on that, which is why that Robinhood stuff is important. Why so much insurance? No, it was Airbnbs. It was flights, dude. I went to a wedding. There's so much shit, dude, I had to pay for. Someone says, welcome to adulthood. Some of it could be a write-off. Yeah, some of it. I was at a business meeting at the wedding. No, I mean, technically, I met Iliano at Virginia, and I guess we had a business meeting or something. We had coffee. That counts as like networking, right? We could write that off, right? Somehow, I don't know, but yeah, it was a lot of money. So it is what it is. But that got done. Did Palantir cover your flight to AIPCon? No. Palantir paid for nothing, dude. Everyone's like, oh, did Palantir recompensate? Dude, they paid for no flights, no airports, no compensation for hosting the show. And quite frankly, I don't think they can, because I talk about the stock so much that if there was ever any form of compensation, I feel like it would be a massive conflict of interest, even if it's like reimbursing me for my flight, which I think is harmless. But still, because I talk about the stock so much, I think they're like afraid to do any type of compensation. That's why when everyone's like, oh, would you accept a job at Palantir? If I accepted a job at Palantir, I could not talk about Palantir. No one who works at Palantir can talk about the stock as extensively as I do, because I have the freedom to do that because I'm not compensated by them. So yeah, they didn't pay for anything, but it was worth everything I had to pay for. Because it was fun. It was a fun time in California. Okay, let's listen to this. So Masayoshi Son, who is the CEO of the Vision Fund and SoftBank, apparently they sold their Nvidia stake in 2019, and some of these numbers are going to blow you away. they're really upset about selling their Nvidia stake. So they have a new plan on how to make some of that money back. Let's take a listen to this because I thought this was interesting.
Of NVIDIA turned lower today. SoftBank CEO Masayoshi-san talking about selling NVIDIA too soon at their annual meeting in Tokyo overnight and doubled down on the narrative that he's going on the, quote, AI offensive. Deirdre Bose is looking at that for today's Tech Check with some new details on what that means, Dee.
Hey, good morning, Carl. So according to a source familiar, this is not going to be like the Vision Fund all over again. VCs like to call SoftBank's last offensive era one of, quote, spray and pray. Back then, from about 2016 to 2019, the Japanese conglomerate, they raised a ton of money, more than any VC fund raised before them. And then they deployed it into more than 450 companies, hoping for one big winner to pay for the rest. I'm told that this time around, Masa-san is going to be a lot more focused and that ARM will be the centerpiece of its strategy. So instead of spreading his bets across many different startups and industries, he's looking at a smaller universe of companies with a more explicit fit with ARM, now SoftBank's crown jewel, and really its largest stake. My source says that strategic M&A will play a large part and that SoftBank will be more operator this time around, less traditional VC investor, which
they own 90% of ARM, by the way.
Might help explain some of Masa-san's other comments overnight, or we'll call them musings at the AGM. He talked about NVIDIA as the fish that got away. Back in 2019, he sold a nearly 5% stake in NVIDIA, booking a $3.3 billion return, which was great. But had he held on to that stake, it would be worth about $160 billion today.
Bro, when I heard that this morning, he sold for $3 billion. It would have been worth $160 billion. That's more than 50 times what they sold for. And you could just imagine the type of, they would have erased the WeWork mistake, the Uber mistake, like all the mistakes that the Vision Fund did. Remember, they lost like 40 billion or something on WeWork, or maybe 20 billion, but it was a lot of money. They would have erased all of that times like 5 if they had just held on to NVIDIA, but they didn't.
If given a chance to choose now between ARM and NVIDIA, Masayoshi-san said that he would choose ARM without a second of hesitation. I'm told it's because he believes that through ARM, he can build an AI company to rival NVIDIA. Masa-san has always been very, very bold. This slide from a SoftBank presentation a few quarters ago underpins that strategy. He believes that building out ARM's target markets across devices, auto, infrastructure, and IoT will create a massive AI winner. And as we've highlighted a number of times on Tech Check, ARM is now SoftBank's biggest holding, replacing Alibaba. Largely thanks to its post-IPO run over the past year, it has nearly doubled SoftBank's net asset value. Yet SoftBank's market cap, it reflects skepticism from investors around that strategy, that very bold strategy. Its market cap is less than its total holdings. And that's also something that activist investor Elliott Management has taken note of. And it believes that the way to narrow that gap is not necessarily going on the AI offensive, but through a $15 billion buyback. I've reached out to them on what they thought about Masa-san's comments.
I don't think they're going to do a buyback. So, I mean, this is really interesting, right? For those that don't know, SoftBank and Masayoshi-san, the reason you guys might be wondering, why is this guy, like, let me show you a picture of him. Why is he so powerful? Why is he so special? How did he raise all this money? He raised a lot of money in 2016 from the Saudis. They gave him a crap ton of money to do his like VC investing. That's when he messed up on WeWork and all this stuff. He put $20 million into Alibaba back in 1999, if I'm not wrong. Yeah, round about that time, 1999. They made $72 billion off of that. So when you put in, or sorry, it was in the year 2000. So in 2000, they put in 20 million bucks and they made 72 billion. So, I mean, which I think now is more than the market cap of Alibaba today, if I'm not wrong, or it's a little bit. Alibaba market cap is 178 billion. Okay, so it's almost, it's about a third of that. But so like it's okay. So 20 million to 72 billion, you're going to get a lot of people around the world that are like, "Oh, this guy knows what he's doing with his money." And so he got flooded with money. And he made some good investments here and there, lost some money here and there, but they got NVIDIA. And they had 5% of the company in 2019. And he made $3 billion, which is not bad, but at 5% being worth 160 billion. Again, we can all play these games with plenty of investments and mistakes we've all made in our life, but I mean, that's pretty hardcore, right? To not hold on to that. So now the decision is to take ARM, which is ridiculously overvalued, in my opinion, at $167 billion market cap. It doubled since the IPO. ARM owns 90% of it. This stake in ARM, or SoftBank owns 90% of it. This stake in ARM has doubled the net asset value of SoftBank, which is now more than the market cap. SoftBank's market cap is 57 billion, and they have more in NAV versus their market cap, which is why activist investors are saying, hey, you got to buy back the stock, get people more excited. Now, his plan to make ARM competitive with NVIDIA, I don't understand what that means. I don't know what that, I have no idea. Like, how are you going to do that? Because to my understanding, ARM is differentiated from NVIDIA, and there's ways to pivot it, and I don't think it's going to go through the GPU thing, but there's a lot of different ways to make ARM, I guess, kind of competitive with NVIDIA in a lot of different respects. I don't necessarily know what that would be. But ARM at 200 billion, NVIDIA's at 3 trillion. To be a real competitor with NVIDIA, I would imagine they need more capital, or they just need, quite honestly, more growth. And I don't know if that's there. So NVIDIA should try to buy ARM. They tried to buy them for 50 billion back in 2018, I think. But that got struck down from the courts. So it is interesting to see that they're now betting the farm on ARM, and they don't want to just invest in a ton of AI startups. Because a lot of these AI startups, like we all know, a lot of them are just like, they're using ChatGPT, and they're just like, you know, they're wrapping something around ChatGPT and making it look cool. I think a lot of them are not going to be that exciting. The ones that are exciting are probably going to win because it's so hard to win as an AI startup. But it seems like they really think ARM can go all the way. And if that's the case, then maybe ARM becomes their next NVIDIA. But I don't know if it's going to be the $160 billion stake that they could have had in NVIDIA. So we'll see what happens, but that was one of the things I thought that was really interesting in the context of SoftBank, and that's what they did. Another quick thing I want to show you guys, which I thought was really interesting today as well. The CEO of Dell has started to tweet about Bitcoin in a very auspicious way. So look at him. This is a great account to follow. Me Cookie Monster, very entertaining. And the Cookie Monster is eating Bitcoin. Okay, that's interesting. Then he says, what do you think will be the next breakthrough in tech? Please vote and share your thoughts. AI, blockchain, space tech, quantum computing. This guy doesn't really do polls like this. And then he's talking with Saylor. He said, scarcity creates value. And then Saylor responded, Bitcoin is digital scarcity. So are you guys thinking what I'm thinking? Let me see if anyone says in the chat. Are you guys thinking what I'm thinking based on these tweets by Michael Dell? By the way, did anyone check the money market funds, or you guys are going to make me check it? I got the money market fund updates. All right, here we go. So let's do the first question first. What do you think? Why do you think Dell's tweeting about Bitcoin, Michael Dell? And then what do you think about money market funds? Increase or decrease? Increase or decrease? I think it's kind of obvious why he's tweeting about Bitcoin. I'm probably wrong why he's tweeting about Bitcoin, but if I had to guess why he's tweeting about Bitcoin, Michael Dell Satoshi. Okay, I wouldn't go that far. I think Dell might buy some Bitcoin on their balance sheet. Maybe. You never know. Maybe. I mean, Bitcoin's dipping, right? By the way, what's his name? Saylor got 65,000. Bitcoin was at 63,000 today, so he didn't get the absolute bottom, right? And maybe that is the bottom. Maybe it's not. But who knows? Maybe Dell says, like, if I'm the CEO of Dell, I just sold $700 million of stock. One of my C-suites just sold another $36 million. The thing's up more than 100% year to date. How do we keep the momentum growing if the growth isn't always consistent in our earnings? What if we just buy some damn Bitcoin? Even if like we just got a ton of more capital, what if we put in 250 million in Bitcoin? Again, probably won't happen, but it is really weird that Michael Dell, who doesn't tweet about Bitcoin ever, is tweeting about Bitcoin. You know, like he tweets normal stuff that a CEO tweets. Like I'm looking at his tweets right now. He's tweeting about golf and stuff. And he's like tweeting links to Dell's new computers. He's never tweeted about Bitcoin. For some reason, started tweeting about Bitcoin. So that's interesting. Okay, money markets, increase or decrease? What do you think? Increase or decrease? What do you think? This one was expected. I expected to see the money markets go in this way. So let me know what you guys think. Increase or decrease? Then we'll call Steve. We'll get some of his thoughts on what's going on in the markets. Robinhood up after hours, 22.35. Again, just absolutely beautiful performance by Robinhood today. Absolutely incredible. On a red day, on a rebalancing day, on the witch hunt day, quad witching day, whatever it is, they gave Robinhood up 2.5%. Not bad at all. Apple right here. Again, Apple probably got rebalanced out of some of these ETFs, and maybe that money fell into some of these other stocks. And maybe that's another reason why Apple fell. Intel also good day, up 1.5%. DJT up 3.4%, and then Enphase and SolarEdge still struggle a little bit today. SolarEdge down 3%, Enphase down 1.75%. Okay, it's kind of mixed, decrease and increase. The answer is money market funds this week decreased by 22 billion. It makes sense. It makes sense to me. The S&P hitting new all-time highs this week for the 30th time this year. It would be very weird if money was not decreasing from those damn money market funds. And if they were increasing, if they were, then the amount of money that eventually will come out of money market funds back into the markets, I think would be intense. So interesting enough to see that we have a decrease, but I kind of what I thought was expected, that we would have a bit of a decrease. And so there we go. Decrease right there by 22 billion. And then again, Rocket Labs did we close above 5 on Rocket Lab? I think that happened. Rocket Lab, now it's down after hours at like 498, but still up 5% on the day. Okay, let's give a call to Stephen Fiorillo. Let's see if he picks up. He said he should be free, but let's see. He has some interesting thoughts on what's going on with AI and the demand for AI. And he bought a new stock. Well, not a new stock, but he did buy another stock today. Stephen Fiorillo, how are you?
What's going on?
You are live on the market close with 775 people who want to hear your thoughts on the broader global capital equity markets. And so I have some questions.
That's a lot of people. That's a lot of people.
Yeah. And so I want to ask you about a bunch of things. I have a lot of topics in my mind. But the first thing I want to ask you about is something that you did, I think it was last week, where you texted me and you said, hey, I don't care, I'm buying NVIDIA. And you told me that at like 125. And I was like, Steve, don't be that guy.
The fact that you know, 125 the price, not the time of day.
Okay. Did you actually buy it at 125 p.m.?
I have no idea. I thought you like memorized the time we spoke. Like, that's freaking impressive if you did.
You know when I did debate in high school, I did probably like 600 to 700 debates. 2 years out of graduating high school, I could tell you the judge, the name of the debate, the tournament, the amount of speaker points I got, the round, the arguments I made, all that stuff on any debate. It was kind of obsessive. It was insane because I remembered it so well. Now, if you asked me about it, I can't tell you anything. So memories have faded. But you bought it at 125, and I was like, oh, Steve, no, you're that guy. You bought the top. And you were like, you know what? I don't give a fuck.
I bought it lower than that. I bought it like 122.
Okay, regardless.
And then I bought more, and then I bought more again.
Okay, well, it felt at the moment you were buying the top, and then the sucker runs to 140, almost 145 at one point. Now it's back down to 127, whatever. But my question for you is, why did you buy at 125? Are you going to buy if it goes down to 100? And how do you feel investors think about NVIDIA as a stock right now?
Okay, so the very short answer is I was in other things, and I wish I could own every single stock. And obviously, it was a mistake not being in NVIDIA. I don't think anybody could have predicted what NVIDIA did, even people who are long NVIDIA. I mean, this is one of the craziest revenue growth and earnings growth stories I think I've ever seen. And, you know, I think it's going to keep going up. I decided to buy because I can't call tops in the market. I certainly can't call bottoms in the market. And I think that there's a case to be made where maybe a lot of stuff is pulled forward, but at the same time, it looks like this industry is not really going to slow down much. And I think you're going to get people that continuously buy, and I wouldn't be surprised if NVIDIA goes to 100. I wouldn't be surprised if it goes to 150, 175. So I bought it. When it went up to 140 and then it came down, I think I grabbed more like 132. And I grabbed more today, I want to say around like 127-ish, that area.
So what do you like? Why are you not feeling at all that NVIDIA is up almost 200% year to date? I should chill out. What is the inch? What's forcing you to be like, no, I need more?
No, because I don't have a full position in it.
Yeah, but why entry points matter? Why full position at not the top, but when something's already run 200%? Why not wait?
Because if I'm not buying this to sell it in a week or a month. And if I think that this has the potential to go to 4 trillion and then 5 trillion in a couple of years, does it really matter if I pay 125 a share or 135 a share? Does it matter if I pay 115 or 140? Not really, because I'm going to average out. Look, it could keep going up. It could go down. I don't know what's going to happen. All I know is I'm just going to buy at different points, and eventually my cost basis will average out, and I'll probably end up making money on it.
So let's talk about that. Let's talk about that. Why do you think NVIDIA's demand? We have a mutual friend who is starting to feel this AI demand, AI wave is kind of a bubble. Why, all right, here's the broader question. Why is AI not in a bubble right now?
So I don't believe AI is in a bubble now for the simple fact that it's in its infancy. You look at the past 4 decades, and I'm a little bit older than you, but I look at how compute has gone over the past several decades. It's only increased. The genie is out of the bottle and it's not going back in because it never goes back into the bottle. You went from a Commodore 64 and an old school IBM computer with floppy disks to little hard disks that were 3.5 inches, the CD-ROMs, to the 486 and the 586 Pentium. And then you went to this laptop that cost like $5,000. And then you went to a smaller condensed version. Then you had smartphones. Then you had cloud computing, SaaS, enterprise platforms, internet. It never stops advancing. AI is only scratching the surface. And if anybody thinks that AI is going to stop or get constrained over the next 5 to 10 years, I'd be willing to take the other side of that bet. I think that we got a long way to go. I think you got a lot of growth left directly and indirectly because their chips are being sold through Dell, HP. And when you actually get a light version of this that hits PCs, their chips are going to be even more in demand than they are now. It's going to be much different than them coming out with a 4000 series graphics cards for video games.
Do you think they get to $5 earnings per share next year?
I mean, I'm driving right now, so I can't pull it up. What's their go on?
The only reason I'm saying that is because the low estimates are at like 310, the high estimates are at 5. If you put a 30 multiple on that, you get 150, right?
Yeah, no. The only reason I'm asking is I don't know what the forward EPS is after the split. I'm not in front of a computer. What is the forward guidance?
It would be $50 on the high side, but because the split it's $5. Their guidance is like a little bit below 3 or in the mid 3s, which would be like basically if you put the multiple on that, is close to $115, $120 price.
They got to keep beating, but it doesn't look like they're going to slow down. And the reason I don't think that this is going to stop anytime soon is when you have Alphabet, Meta, Microsoft, and Amazon spending the type of money they're spending on CapEx, they're going to dictate what AI becomes and what it transforms into. And then you're going to have the second layer with the software companies, with companies like Workday and Adobe and Oracle. They're going to embed it into their enterprise product platforms. You're going to have Dell and HP and these other companies selling servers. And this is just it's going to become just another thing that keeps going. I mean, GPUs weren't really a thing except for in the high-end gaming community. And then all of a sudden became commoditized with crypto mining. And then more and more things started using GPUs instead of CPUs. And they become, I don't want to say standard, but the majority of computers that cost over $700 have a dedicated GPU in it. I mean,
could you give me any bear case for how NVIDIA doesn't keep up this growth in your head?
Sure. Yeah, I mean, look, there is a very specific bear case that could play out. Amazon, we know, is working on their own chip. We know Microsoft's working on their own chip. We know Google's or Alphabet's been working on their own chips. There is a real scenario, and I am not bullish on Intel or AMD taking market share away from NVIDIA. I don't think that is going to happen. I think what's more likely to happen is these companies that have blank checkbooks because of the amount of free cash flow they generate, I think that they are in a position where they could pull off what Apple did by getting rid of Intel, getting rid of NVIDIA, and then getting rid of AMD and doing their own architecture and using their own silicon. Amazon, Microsoft, Alphabet, they could very well create their own chips that are built to handle the very specific things that they want to do. If that happens, you'll have a lot of demand fall off from them, and then it's a crapshoot to see if the demand gets picked up by all the companies that are kind of waiting for the excess stuff to come on the market.
Right.
So you know.
Okay. That's fair. And I agree with you. I don't think that demand is going anywhere. In terms of macro, are you feeling we kind of have a melt up towards the end of the year, given everyone is screaming that this is a bubble, that this is a top, which kind of signals the opposite?
It's not a bubble. I don't understand. Maybe I'm stupid. But I guess I'm stupid because if you look at what a bubble actually is, this is nothing like a bubble. Okay. Remember, markets can get expensive. Is this market expensive? Some would consider it expensive, and I don't know that you can really argue because that's their opinion. But if you subscribe to the framework that a market is expensive, a market can stay expensive for years and years and years. That doesn't mean it's a bubble.
So why was 2021 a bubble?
I don't know that 2021 was a bubble.
Okay, so that's interesting. Why do you think 2021 was not a bubble?
I don't know if it was a bubble because, quite honestly, you had more companies that were making money than weren't making money. Sure, you had new startup companies that had a hype cycle around them and the rug fell out from beneath them, but that doesn't mean the market was a bubble.
Right.
I mean, this wasn't 2000 where you had the majority of these companies weren't making any money, and it was a much different time. You didn't have Apple doing what they're doing. Google and Amazon weren't profitable. Amazon wasn't. I don't know about Alphabet. Maybe they were, maybe they weren't. Nowhere near where they were right now. Meta wasn't a publicly traded company. It was a completely different time. Anything with a .com in their name was getting a crazy multiple. We're not seeing that with AI.
Yeah, I think in 2000, you're right. Like the pets.com was going public, but in 2021, I think you're right. Like, yeah, companies definitely got expensive, but the only part of the market in 2021 that was really bubblish was the SPACs. Like,
and think about this.
And the NFTs.
They may not have been generating, don't even say NFTs because that's not part of the stock market. That was just something completely different because you could say Beanie Babies too. That's true. Let's keep it with just stocks. When you think about it, those companies, they may not have been generating earnings, but they were generating significant revenues. Like there's a lot of companies in the .com bubble that weren't even generating revenues. So
that's fair.
That's why it's a lot different. I don't think that saying that 2021 was a bubble. 2021 was the market got really ahead of itself and really expensive, and inflation started happening, and you started getting into hard macroeconomic factors, and that was a big contributor. So I don't know if it's fair to say that was a bubble versus just a lot of things coming together that was negative for the market.
Yeah, and a lot of stocks that pumped like randomly during that time. We saw that already this year with like Faraday Future and Soundhound and stuff, but eventually those things get weeded out. And it's when Faraday Future becomes a $10 billion company or something, right? Like it's when things get so egregious, but things can get egregious to an extent and then it plays out. I mean, even GameStop at $12 billion market cap with $4 billion cash, it's not that egregious at the end of the day, given how much cash they've raised. So the companies that are putting up the earnings, your argument is that it makes it less bubbly if the numbers are there to justify their growth.
Yeah, I mean, look, it goes back to what I've always said. I think that the market's wrong with looking at things a specific way, but $1 is equal to $1. I don't care if you're making widgets or you're making tech. If you are generating $100 of EPS, you're generating $100 of EPS. If you're growing at 10%, you're growing at 10%. Those companies should be valued the same because you have the same exact earnings and you're growing at the same growth rate. So the market doesn't work like that. So who's to say that the market's expensive? Tech is always traded at a higher multiple than other sectors. So I don't know if the market's really that expensive, and I don't know if it's really that egregious. Apple's generating $100 billion in net income. Think about that number for a second. $100 billion of net income a year. That's more than $1.5 billion a week in profit.
Do you think the Fed's cutting rates this year?
Oh, you had to ask that, didn't you?
I gotta know.
I don't want to screw up my perfect record.
Well, your current opinion is you think there's one cut, right?
I think there's going to be one cut because you have unemployment starting to go up. Unemployment's up 0.5% over the past year, and it's not in danger territory, but if you get to 4.2, 4.3%, you're teetering on the brink of the real possibility of a recession coming.
They'd rather do 25 basis points now versus 200 basis points in like 6 months or something, right?
What I think the smart move for them to do is cut by 25 bips in July, because that gives you 2 months to see how the market receives it and the economy receives it. It's not a huge cut. It's a little test of waters, but you have an extra month delay because there's no FOMC meeting in August. So you get to play around and see what it's like. And then you make another decision in September. I don't know that they're going to do that. If unemployment ticks up again, I think they will cut in July. Otherwise, I think it's a September cut. And I really have a hard time saying that because Powell's gone out of his way to continuously say they're apolitical, they're independent, blah, 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 blah. So a September cut is going to look like they're trying to juice the economy for the election. So
Right.
I don't know if that's really that plausible.
Right.
And that's why I've always said I think it's an early summer, whether it's May, June, July. I was never in the camp of March. I wasn't in the camp of 2023. I defended that the entire year, that there is no way the Fed was cutting in 2023. I do think it's going to be July because I think that they're smart enough to know that they got 2 months, they can test it out, and if they don't do another rate cut for the year, that's fine. But who knows? I mean, I don't know. I think that they should have cut a long time ago, and they've made a continuous mistake. So we'll see.
Okay, question on Apple, that company that puts $100 billion in net income. I don't know if you saw the news, Steve, but
Yeah, sorry.
they are suspending their work on the Vision Pro 2, and they are focusing on a cheaper version of the current Vision Pro.
Oh, really? So you mean what I said about another iteration at a lower price?
No.
point?
You don't get to get out of that.
Oh,
You
yes,
don't
I
even
do.
you don't even try to
Yes.
weasel your way out of this.
No.
'Cause
no,
someone-
did I not say?
Someone on this market close said, Steve, they're not even gonna fucking work on the second one because no one wants this shit.
Technically, this is a second. No.
It's not a
Technically,
it's a cheaper one, bro. It's not a second one.
It's still the second version.
It's Vision Pro S. That's what you got, Vision Pro S. That's
I'm just saying. I said second one. I didn't say a brand new one.
dude.
I
No,
said there's gonna be
no.
more versions.
The
Yes,
second one
yes.
implies the number 2.
No, it doesn't. No, it doesn't. This is number 2. You had Vision Pro 1, which is a big hunk of freaking plastic, and now you're getting Vision Pro number 2. Doesn't matter if it's better or not. This is the second one.
Hold on. What if they don't call it Vision Pro 2 though? What if they call it like
I don't care if they call it Amidst Vision. It's
Steve?
still the
Steve,
second Vision Pro they've made.
Steve, you're wrong. If they call it Vision Pro Lite, it is not a new version of Vision Pro. It is a cheaper.
Is it the second version or not?
Okay, let me ask you another question. What if they just make the Vision Pro, the current Vision Pro, like $1,500 versus $3,500? Let's just say they cut the price. Is that a Vision Pro 2?
No, because it's the same model. But if you change the model, that's a second iteration.
Oh, so you're expecting a legit like revamped version of it, is what you're saying?
They need, and you can fact check me on this, they need a version that's $799 to $999. They got to be under the $1,000 price point. It's got to be smaller and more comfortable.
Can you just admit that I was right and no one wants to use this shit, and that's why they're not working on the second version of this? Because
because
Apple
we
can
don't
still
know
be a
that-
big company without the Vision Pro. They don't need the Vision
Of course they can, but we don't know that nobody wants to use this.
Someone in the chat
It
just said,
needs-
someone's in the chat just said, does anyone want mine for $2,500? It's collecting dust. They're willing to sell it at $1,000 loss.
I'll buy it for $500 if they want.
Okay, no, don't be. They're not going to take $500. But my point is, if people are
Who
willing to
knows?
lose
Cold
$1,000,
hard cash. Cold hard cash.
Steve, I don't think this is a form factor that's going to be mass consumer. I just don't.
Listen, this is something where if it gets to the price point that is palatable, that doesn't break the bank, that people can buy for a gift to somebody, that type of thing, you can see mass adoption of this. There's a lot of things that can
No,
be built
you
with this.
can't. No
can.
one's wearing this shit, bro. Steve, no one's wearing this shit. It's okay. We can admit it. No one wears the meta shit.
Yeah, they're all too big.
Oh my God, Steve. No one
They
wears the
need
Ray-Bans
to-
either, bro. Like, no
They
one wears-
need, listen, they need to have this where it's a pair of visors or sunglasses. Okay. Once you get to that and you embed AI into it, the amount of things this can be used for is crazy. It would be the next form of computing. But until that happens, I don't think there's going to be a lot of movement on it because you have multiple verticals. One, healthcare verticals for teaching doctors.
No.
training surgeons.
Hold on. All the verticals you talk about are enterprise use cases, which I am bullish on. I am not
Right.
bullish on this replaces the iPhone or this is like billions of people have it on their day-to-day life.
I've never said it replaces the iPhone.
But your implied volatility of the Vision Pro was that it was.
I implied that it's going to work with the iPhone, and I'll be able to wear a pair of sunglasses that is a Vision Pro that connects to my iPhone. That when I look at you, it'll scan you and it'll bring up your LinkedIn profile.
That's
it'll bring up
weird.
facts about you.
That's
Why is it
creepy.
weird?
That's
No, it's
creepy.
not. It gives me an edge. I get information about somebody I have not met yet. If I'm sitting in a negotiation and I get information about somebody and I can connect with them on a human level, I am putting myself in a
Hold on.
Hold on.
You think you're gonna connect with someone on a human level with a pair of goggles on your eyes when they can't even see you?
Why are you saying goggles? I said they need to be like a pair of sunglasses.
Okay.
They can't
If I'm
be
wearing some
goggles.
Ray-Bans, do you think someone's gonna connect with me looking into my Ray-Bans?
If they can turn this into a pair of sunglasses, there is no reason they can't turn it into a pair of clear lens glasses. Okay. There is no reason they can't do that in the future. And if you can get into a negotiation or you get into a social situation where you have in your lens that nobody else can see every fact that is on the web via Facebook, Instagram, LinkedIn, et cetera, about somebody, and you can learn about somebody before meeting them, you have a clear advantage. You already know what to talk about to spark up a conversation. Clear advantage.
Okay, I agree with you, but the fact that you just said clear view glasses, like the glasses I'm wearing right now, I think you keep stretching what this thing is going to turn into to make it work your vision.
But I'm not saying that it's going to happen in a year. I've said 5 years.
Dude, my point is if they're not working on the second version of this thing yet, it's dead. They're done. They're moving on.
They need to get a smaller version.
Which is the right decision, by the way.
Which is the right decision. And then they need to keep tweaking it and get it to where it is wearable, where it doesn't look ridiculous, and it needs to have other use cases. But when you really think about enterprise training applications, when you think about what you would see in a Terminator movie about scanning you, that type of thing, when you think about entertainment, look, I'm very bullish on if this is look, I wear glasses in front of the computer, okay? If I put glasses on for entertainment, that's no different than me wearing glasses with a computer. And if they embed VR sports at Madison Square Garden, Yankee Stadium, SoFi Stadium, any of these stadiums, and you can have a package on Apple TV where you're getting live sports from different vantage points in VR, that's going to be huge. It's going to be huge.
All right, we'll see. We will see. But that's what we got with Apple right now. Apple down. Go ahead.
Apple, if they don't continuously make this better and make it smaller, it's dead and it's not going to do anything. I agree with you 100% on that. They need to hit this perfectly. This isn't something that they can go half-ass on.
Yeah, again, dude, I think the Vision Pro is already dead. I don't think there's a use case for it in consumers. I don't think people are going to use it. I think they're waste. I think this is going to. Hold on. I think this is going to be like EVs for them. I think it's a fun experiment. I think they will pivot to AI, like across the entire suite of products, and that might work. But the Vision Pro is not doing it, in my opinion.
Well, sir.
So you bought a stock today, or you bought more of the same stock. It's called Fortinet.
Yes.
TLDR, what is Fortinet and why did you buy it today?
Cybersecurity company. I think cybersecurity has a huge total addressable market. The amount of cyber threats is just continuously increasing. They're getting more complex, and companies are spending more money on cybersecurity. Fortinet has an enterprise cloud platform. They have switches and firewalls, and they are, I think it was a Gartner report that placed them pretty high on the AI and ML side of cybersecurity for hardware. And I think there's a magic quant report on something else. I don't exactly remember which one it is that placed them pretty high on the cybersecurity.
So why these guys, but not CrowdStrike?
The last time I looked at it, they traded at a better valuation than them. And when you look at the forward earnings, this year is, I believe, high single-digit growth. But the next several years are double-digit earnings growth. And I think that when you look at how much Cisco paid for Splunk, $28 billion, and you look at where Fortnite is trading and what their profitability
Did you say Fortnite?
is, Fortnite.
Yeah, that's a video game,
Maybe
right?
I said Fortnite. I don't know. Maybe I said that. I think that when you look at where Splunk got bought out for and what they're generating on revenue and free cash flow, and then you look at where Fortinet is trading for, I think it's a very interesting play. And I think cybersecurity in general is only going to get bigger. And I think you're going to see more people gravitate toward that sector. So I think it's an interesting play. And I think, look, they could be an acquisition target at some point.
Palo Alto did get upgraded today as well. So that was good.
Yeah, I mean, it's good. I think it's a sector that's got years of upward potential.
Okay, SoFi. Every week I ask you, every week you tell me the same thing. 632. It's heavily below 7 at this point. Have your thoughts changed at all about SoFi?
No, I'm getting ready to buy more. I mean, I probably have enough, but at these prices, it's pretty tempting to buy more. Yeah, I mean, look, until they give me, I don't care what the market thinks of it. Until they give me a reason to be worried, there's no reason for me to get worried.
Okay.
I mean, I just don't operate like that. You know, I have my investment thesis. The market doesn't agree, but the numbers are there. And, you know, them coming out and reiterating their 2026 EPS, 2026 is around the corner, year and a half away. I mean, they're profitable. If they continue to stay profitable, they will probably get an S&P at some point in the next 2 years. And I think they're the bank of the future. I mean, until the numbers give me a reason to worry or Noto starts selling stock, which could be the worst thing that could ever happen to the company.
That would be bad.
Or, yeah, that would be horrible. Or they revise down on guidance. To me, the share price is just a number that fluctuates in my account. That's all.
Have you thought about Rocket Lab at all, Steve?
Some people tried selling me on that. I don't understand it. So
it's just think of it as a small SpaceX, and it's $5 a share, 2 billion market cap.
That's not what I mean when I say I don't understand it. When I mean, look, I know what they do. I don't understand how they're really going to make money.
I mean, they're making like 90 million a quarter already.
Yeah,
they launch satellites, bro. They launch rockets. They fucking.
Yeah, how many satellites do we freaking need up there?
Steve, come on. That's a ridiculous argument. The world needs so many satellites and rocket launches, space debris, and all the shit that's up there. Like, it's a commercial enterprise. That space. It's only getting bigger and bigger. Japan just paid them $80 million for 10 launches.
Okay, but I mean, how much growth potential is there? I don't know. Versus
it's
what
space
SpaceX is doing.
If Blue Origin, SpaceX, and NASA and all these entities are like continuing to promote what space could become, I mean, at 2 billion market cap, SpaceX at 200 billion. If SpaceX goes public at fucking 350 billion, 400 billion, I don't know if Rocket Lab's stuck at 2 billion. Again, I don't have a lot of this stock. I'm just giving you the bull case here.
Yeah, but I think that, you know, there's a big difference between investing in SpaceX that gets a must factor than investing in Rocket Lab.
Yeah, but is it 100x the value of Rocket Lab? I don't know if it's 100.
I don't know. I mean, I think I'd rather put my money in other companies, to be honest with you. I mean, I don't see how they can really grow exponentially. I could be 100% wrong. It's just not a sector I'm interested in. Yeah. I think there's easier investments for me.
I do think it could be quote unquote dead money in your portfolio because you're just waiting for it to eventually have its moment. But it's $5.
It's one of those things that a lot of things have to go right.
Yes, that is true.
I don't necessarily love that. Like, a lot of things got to fall in place and go right. I don't know if I really like that. I don't know.
Okay, you said last time you were on the show that Amazon would be your pick if you had to own one of the Mag 7s forever. Have you changed your mind on that?
Nope.
Nothing this week made you feel you should change your mind on that.
No, why?
No, I'm just asking.
Why? Because somebody said that their expenses are going to go up because of AI. Who cares?
No.
Who cares?
Amazon's at 189 right now. That's all. I was just it's up 1%. So
Yeah. Do I really care that an analyst came out and said that their expenses are going to go up? Cool. Like, okay.
what do you think of the analyst who downgraded Palantir to $20 today? His name is Brian White.
Once again, do I care what an analyst thinks? Nope.
You know you are an analyst, right?
No, I'm not.
I'm an analyst. Even if we're not represented by like JP Morgan, we're analyzing the markets. So like
I have an opinion on things.
You're an opinionist?
That's right.
Okay, let's get into the real discussion. So
Amazon, yes, Amazon is I think the headline and the question was, which one do we think has the most potential to hold? And I'm probably never going to sell Meta, and I'm probably never going to sell Alphabet. I'm probably never going to sell Amazon. But Amazon, I think the headline cycle in 2028 is going to be crazy because they're projected to become the first trillion-dollar revenue company in 2029. And if they come anywhere close and get to like 920 to 950 billion revenue in 2028, I think the hype cycle around Amazon is going to be like something we've never seen before.
So your bull case is that you think a Barron's headline about Amazon being a $1 trillion revenue company is going to be what pushes the stock?
That's not what I said. What I said
you just said the hype cycle on the headline is going to be like something we never saw before.
I didn't say headline. I said hype cycle. You said headline. I said hype cycle. Hype cycle can mean many things, but when everybody starts talking about Amazon $1 trillion revenue, everybody's going to pile into this that doesn't own an individual.
So your bull case is that people are going to FOMO into Amazon when they put up $1 trillion in revenue.
That's not the bull case. The bull case is that their revenue growth and their earnings growth is huge. Their earnings growth is double digits every year for the next 5 to 7 years.
Oh,
their revenue growth is huge, and when you look at them on a forward multiple, they trade at the cheapest valuation they've ever traded at. I mean, it is crazy. And they're generating $50 billion in free cash flow. They got all the tools in the world. And when they're generating $1 trillion a year, at a 10% margin, that's $100 billion in net income.
What did you think about Trump on Olin?
I thought the Olin guys did a great podcast. I think legacy media should be very worried. And I would love to see Biden go on there. I mean, look, these guys have opened it up to everybody. And, I question why people even watch legacy media these days. I think the All-In podcast guys are so smart. They ask great questions, and they're very fair in the interview. I think they did a great job.
Yeah, the only legacy media I watch is CNBC, and it's because I actually do enjoy some of the guests that come on.
That's not legacy media. You know what I'm talking about with legacy media.
You know, well, people say like, yeah, you're right. I mean, you're right about that. Yeah.
It's a financial network. That's not legacy media.
No,
that's
you're right.
not what anybody means when they say legacy media.
Okay, so what I was going to say is I tried watching MSNBC the other day, and I was just like, it was tough, dude, because it's really tough to see how they're trying to calculate narratives. And like, there's so many independent YouTubers that I like just like watching just to get a different perspective. And so All In, I think everyone in the tech ecosystem knows these guys. They're, billionaires. They've done very well in business. So their perspective and how they ask questions to candidates really matters for all of us, which have money in the capital markets, and we need to make sure that money doesn't evaporate. So
look, they're interesting guys. They're very highly intellectual. They ask very good questions, and they're not combative. So it's a breath of fresh air.
Yeah, I hope Biden goes on, because it would be really nice to get him and Trump side by side to see.
I'll tell you, I would rather see them host a debate than any of the legacy news networks.
Yeah, of course. Yeah.
I mean, I don't know. I think the legacy news networks are just, I don't know, not my cup of tea. I would rather see a debate on the All-In podcast, and I'd rather see Rogan host a debate or Lex Friedman. I'm over legacy media. Don't care.
Last question for you. Buffett bought another $15 billion of Oxy. Why the hell do you think he's buying so much?
He's going to end up owning the company. I don't know why people are so surprised. I've been saying this for 3 years.
You've been saying this for 3 years? This is documented?
Yeah.
Okay, why is he going to end up owning this?
Go back in some of my Berkshire articles on Seeking Alpha. And one of them I said that I wouldn't be surprised if he just buys Oxy outright.
Well, why would he, like a Geico move? Why would he just buy it outright?
Berkshire Energy is absolutely huge. If you go to their quarterly report, it makes up a tremendous amount of capital in their portfolio. Don't forget, Berkshire purchased, I don't like giving bad numbers, I'm pretty sure 7,700 miles of natural gas pipelines from Dominion in 2020 for $9.8 billion or something like that. It was roughly like 1.3 million a mile pipe, something like that, because you can't replicate the energy infrastructure.
Right.
Energy has always been a very big part of Berkshire's portfolio. And Buffett loves oil and gas, and the guy who's taking over for him was in charge of Berkshire Energy. I mean, it just makes all the sense in the world, especially when they have utility companies, they have pipeline companies. It makes sense for them to just get more invested in Oxy as one of the largest oil producers in the country.
No, that's fair. That is fair. Oil prices have spiked up a little bit in the past. Well, they're down today, down 0.81%. It's at 80 bucks.
What are we at, like 80?
Yeah.
Yeah, I mean,
yeah, dude. If we get a good CPI going into July, I mean, man, if CPI is under, is that 2.9, bro? Like at 3% at least. I don't know.
Oil at this level is not good.
No, I know. I'm just saying.
We need oil at 65 a barrel.
Yeah.
65 a barrel. Oil producers make money. Everybody makes money, and it is a better operating environment for manufacturing and transportation.
Yeah.
No, this is still too high. It really is.
Intel's also up 1% today, 1.5%. That's nice.
I almost bought more today, and I didn't. I may buy more next week. Like Intel's something I want to buy more of. I think it may have bottomed. Obviously, I can't tell the future, but I think Intel is very interesting. I think it's going to take some time for it to come back. But when you think about what they're doing with their foundries, and eventually they're going to be one of the largest chip fabrication companies, and they're going to be fabricating chips for their competition. It's a very interesting story, and I don't think Intel is going anywhere. No, their chips are too embedded in the personal PC market, and I don't know. I think it's a misunderstood company, and I think that they are going through a hard time.
What do you think about PayPal? Because you have a lot of it, right?
I almost sold it.
Really? When? Today?
The past 2 weeks, the thought's been going through my mind just to get out of it.
Yo, same with me. Same with me.
but here's why. Not because I'm bearish, because I feel like I would rather own more Amazon or Nvidia, and I would just use that money to buy one of the two, or maybe go 50-50 between the two, or even buy some more Palantir at this point. I'm more bullish on those companies long-term than PayPal. PayPal's been a numbers story for me, where I just think it is so massively undervalued that this valuation doesn't make sense.
Yeah.
But that doesn't mean that the market's going to give it a valuation that makes sense. This could continue to be dead money. And I'm starting to think this is just going to be dead money, and that the best thing PayPal can do is take the company private. I really think.
Well, the problem is when Apple shows their new ways to make payments, and I think Twitter. I think that's another reason it got hit today, dude. Linda Yaccarino, she made it very clear at some conference that Twitter's gonna do payments. Like they're not fucking around. Like they're doing it. I mean,
okay, great.
That doesn't kill PayPal, but it hurts it.
No, PayPal is more on the enterprise side at this point.
I get it, but the perception is bad for PayPal. 100%.
Yes, and perception is a big part of the market, and that's part of the reason why I'm like, I don't know if I really want to be in this much longer, because even though the numbers make all the sense in the world, and even though there is a bull case, it's getting harder to be a shareholder, because I just don't know if this is going to be something that just goes sideways for the next couple of years. I mean, I want to see what I want to see is their CEO, Alex Chris, come out and say, we don't agree. We're doubling the amount of buybacks this year. We're taking $5 billion off the balance sheet, and we're buying back $5 billion worth of stock tomorrow.
Why don't they do that?
That's what he needs to do.
Why don't they do that?
I don't know. I called them out on it multiple times already. I don't know why they're not doing it. The market has no confidence in the company. You look at the earnings, you look at the forward earnings, you look at where it's trading on a price to free cash flow level, it makes 0 sense. They're buying back shares hand over fist. They have, 9 or 10 billion in cash on the balance sheet with minimal debt, around 8 billion in debt or something like that. I'm not in front of a computer. Don't quote me on that. But they're cash rich and they're unlevered. They can go spend an additional 5 billion in buybacks. And other than that, I don't know anything that's going to get the market excited about them. And that's why I'm really at the point where it's like, man, maybe I need to get out.
Well, I think what you said right there, that last sentence, is the most important. There is no catalyst. And in fintech this year, if you don't have a catalyst, if you don't have something where the market's like, oh yeah, this will increase growth, this will do blah, blah, blah. I mean, like, it's just fintech then, right? It's like there's nothing to look forward to. So.
Yeah, and I'm not saying that PayPal should be $300 where it was at one point. What I'm saying is I think a more realistic price target is 90 to 110, 90 to 120, that area. I would be out if it gets in that area. Like, that was originally my exit strategy, was to exit in that range and be selling cover calls along the way. It's getting harder and harder to stay in it for that now.
Do you care about Kava at all? That company?
I don't even know what Kava is.
It's a restaurant. Yeah, I've never had it yet either, but people like it.
I have no idea what it is.
Okay, I turned
unless it's doing robotic pizzas or coffee. I'm not interested.
Dude, you're such a Tesla investor, bro. Fucking Optimus. Oh, you saw what Elon said? He said,
No, did you see that coffee bar at San Francisco International Airport? Yeah, that, I'm telling you, that's the future.
Elon said the fucking, what's his name? The Optimus is gonna like wash your clothes and all this shit the other day.
It's my use case.
He said it's gonna do everything for you as a human being.
Okay. And if it does everything for you, people are gonna buy it at a $20,000 to $25,000 price point.
Dude, I don't really see the consumer use case yet, but the enterprise use case is massive to me. So
okay.
Eventually when
you finance this over 5 years. You're spending $340 a month. Okay. For $340 a month, you no longer have to cut your grass. You no longer have to do your laundry. You no longer have to clean. You're telling me that's not worth $340 a month?
No, it is, but I don't think it's going to get good enough in the next 5 years to do all that yet. I think it has to pick up boxes. It has to pick up boxes and move them to the right place in a factory first.
I don't know that he has set a timeline of when it can do all these things.
If it doesn't happen in 5 years, dude, if Optimus is not having some revenue in 5 years, I think Tesla investors are not going to be happy, dude, because he's been selling them a dream for a while now, that Optimus.
Well, Optimus will start having revenue in the next 5 years, I think. I mean, he's been saying, or he started saying, that he thinks that they can start selling them in the second half of next year. And they're going to be enterprise grade first with those warehouse tasks. But look, eventually it'll get better and better. And I do think that they'll have a service plan where it gets hooked up to the neural network in Tesla, and every test and every Optimus bot does makes the entire fleet more comprehensive in understanding how to do things and how to perform things. I think this is going to be something that learns 24/7. And I don't even think that we can comprehend how quick the learning curve is going to be with all the compute and all the tasks the bots are doing. This could, over the next 5 years, scale to something that does a lot of things. We got to see. We don't know.
Speaking of Tesla, by the way, they just laid off 14% of their employees this year. That's like the official number we just got.
Okay.
So, I mean, they did downsize this year to try to reduce costs as well.
I mean, look, I'm in it for the bot.
Have you seen this?
And the energy's interesting too at this point.
Yeah, no, I agree. Energy and bots are the most, and then FSD eventually, whenever it becomes real.
FSD licensing. I don't know why Kathy and her team did not put this in there. I don't know why their case is robo-taxis. That's the least exciting thing that Tesla is doing, is robo-taxis. Least exciting thing.
Have you seen this movie called Public Enemies?
Public Enemies with Johnny Depp
and Christian Bale, yeah.
Yeah, was that like 10 years old?
You were not 10 years old, bro. It came out in fucking.
No, I said, what is it? 10 years old?
Oh yeah, it was.
It
Dude,
didn't come out like last year. That's an older movie.
it's 2009. So I tried watching
Yeah.
the first 10 minutes of this thing last Sunday. I couldn't do it, bro. It is so fucking boring. So I'm trying to ask a movie connoisseur, is it worth going back to, or?
I don't remember it that well to say that it was a standout movie. It probably wasn't if I'm not recalling much about it. So just go watch Tombstone, please, for the love of God.
What's Tombstone? What's the movie?
Go watch Tombstone, please.
That's from 1993?
Please. 93, 94, something.
Is this the guy who says, I'm your Huckleberry? Is that where it's from?
Yes, Val Kilmer,
Val
Doc Holliday. Dude, it's an all-star cast. It's one of the most phenomenal movies ever.
Okay, I might watch this weekend. I'll trust you. 10 minutes better be
You
good.
won't-
First 10 minutes better be good, or else
No,
I'm heading to
don't do
Instagram,
that.
bro. TikTok.
Don't do that. This is one of the greatest movies ever. I don't like hyping things up.
I don't care how
Movie's
great it is.
Phenomenal.
It needs to not be slow in the beginning. That's all I ask. As a shareholder or as a movie watcher.
As a shareholder of what?
Of my time, most importantly. That's what I
Oh
ask.
my God.
That was a good one.
Go watch Molly's game. Molly, you liked Rounders. Molly's game is really good. That's on Netflix.
I might watch Rounders again, dude. It's been like 3 years. I want to watch like.
I may watch. The problem with watching Rounders is I want to get in the car and go down to AC.
Yeah, that's true. It makes you want to gamble. Yeah.
Makes me want to go sit in the poker room.
All right, Steve. Good stuff. Thank you for hopping on. We'll see you next week again. And yeah, are you doing anything this weekend or just chilling?
Probably gonna write a couple of articles. I'm gonna try to do one tonight, maybe one or two tomorrow.
Okay, so let me real quick, guys. Steve's Twitter. Oh, Steve, you're above 5,000 followers on Twitter. So there you go. That's amazing.
Oh, look at that. Good for that.
Steve's Twitter is right here. Please make sure to follow him if you have not. And then he just put out an article today about enterprise products partners.
Oh, we should. That's going to be an indirect winner. I guess you can consider that a third derivative of AI, not a second derivative, because their products are going to be critical to helping build AI infrastructure indirectly, because they're moving a lot of fossil fuel throughout 50,000 miles of pipes. They have huge storage capacity, and their products are directly utilized for electricity. And they are building one of the largest export facilities on the Gulf Coast in Texas. So
7% dividend.
Dividend aristocrat, grown its dividend for 25 years. They have a 1.7x distribution coverage ratio. All their growth is self-funded. I mean, this is a cash generating machine, and their infrastructure is basically impossible to replicate.
Okay, it's flat this year, so you're buying it for the dividend, not for the capital appreciation.
Yeah, it's interesting because it's trailing its peer group, and it's trailing AMLP, which is kind of the pipeline index for MLPs. And it's trailing everything, which is interesting because enterprise has always been considered the gold standard in this sector. So yeah, you're getting a solid dividend that continues to grow, or they call it a distribution because it's a limited partnership, but solid income. It's a solid company, and this seaport oil terminal that they're building is going to massively increase their exporting capability. And when you look at what the EIA is projecting, more natural gas production, more crude oil production, more exports in both through 2050. I mean, this is just energy infrastructure is something you can't replicate. You just can't do it.
And AI means more energy, right?
AI means more electricity, which means more energy. I mean, that's why NextEra is so interesting. I mean, they operate, you look at where the largest data centers are in the country. Number one is Northern Virginia, I believe, because of DC. I mean, it's, or Southern Virginia, because it's very interesting when you look at the markets that these companies operate in, where the data centers are. I mean, I think Enbridge is really nice here too. I may do an article on them this weekend.
All right. Good stuff. Thank you, Steve. Appreciate it. Hopefully you guys enjoyed, and I'll talk to you next time.
You're a good role model.
Okay, I appreciate it. Well, you're the guy I'm looking up to, so technically you're the role model.
That is not bullish. I can tell you that.
That's why that's why I need to smoke some cigars soon. That you're turning me into a smoker. So that's.
I mean, I'm not forcing you to do anything.
All right, I'll talk to you later.
Later.
All right, guys, cool. So that's it for the week. We're probably not doing Palantir Weekly tonight because I'm gonna be at my grandparents' house today. Maybe some content from there. Probably not, though. We're gonna have to see. Maybe I'll record it and upload it later instead of like going live. So no Palantir Weekly tonight. Well, honestly, we might just do it tomorrow night instead. I'll ask the guys maybe if they want to do it Saturday night. But yeah, that's pretty much it for me. Hopefully you guys had a good week. It was a fun week. I know I started the market open 15 minutes late this morning, but we got through it. I thought it was a good options episode as well. We talked a lot about covered calls and the psychology of covered calls. So I think people hopefully enjoyed it. If you're learning about covered calls like I am, this year is when I really got into what the potential of them could do for a portfolio. So interesting stuff. Go ride your bike. I rode my bike yesterday morning. I woke up I woke up at 4:30 yesterday. So at like 7 a.m., which is like 2 hours before the show, I just like went on a bike ride. So that's been fun. The problem is, dude, I also think my car is either broken or it's too hot outside. It's 95 degrees in Jersey, but when I turn the AC on in my car, it's not cold air, dude. It's like, it's not hot air, but it's not cold air. And I'm thinking either the AC is broken and I got to fix it. Or like it's so hot outside that it's affecting the car, which is annoying because I have to go drive for like the next hour. So, hopefully we can eventually fix that. We're probably gonna have to get it fixed. It's been 5 years. I'm sure, and sometimes I'm sure in like the early years I was blasting the cold air when I probably shouldn't have, and so that definitely messed up the AC. But yeah, we're definitely gonna have to fix that a bit. But yeah, that's pretty much it. Bring it to your mechanic to get the Freon recharge. All right. Yeah, I figured I have to look into it because it's happened like for the past 5 days. I'm like, all right, this thing is getting like, it's not me at this point. Like it has to be the car. It can't just be the weather. So we'll fix that up. But we'll just put the windows down. Dude, I tried today. It was like horrible. Like you think the wind resolves the fact that it's hot, but then you realize it's hot wind and it's so hard to deal with it. And that's the problem. All right. I think that's pretty much it. I don't know if we have any streams this weekend. Again, maybe Palantir Weekly tomorrow, maybe a guest on Sunday, but if not, it might just be a chill weekend. And then next week is the last week of June. June is what? June 24th to the 28th. I thought this week was the last week of June. I didn't know we had another week of June left, actually. Okay. So we got another week of June, and then we get into July. And we keep going from there. All right. Thank you, everybody. Have a good one. Thank you all for joining the Market Open, Market Close this entire week. It's been fun, been exciting, and it was fun to get back at it because last week we were gone, or 2 weeks ago we were gone. So now we're back. And yeah, we'll be back tomorrow, Monday morning, or not tomorrow, but Monday morning, 8:45 a.m. and keep going from there. George, thank you for becoming a channel member. You guys have been joining the channel member stuff, and thank you. I appreciate it. Again, you don't get anything for being a channel member. It just supports the channel. So appreciate it so much. Thank you for joining. I will see you guys Monday, 8:45 a.m. Eastern, if I don't see you throughout the rest of the weekend. And that's it. Bye, everyone. Have a good one. Have a good weekend. Enjoy. See you guys Monday. Good night.